Hey everyone. Last week I participated in an amazing conversation with a panel of leading commercial real estate brokerage veterans. All of them had more than 20 years of experience in the business, and they were solid experts. Each of them specialize in a different property type, and they each work in a different part of the country. But they had an amazingly similar response to a question I asked, which was, given the recent wave of negative headlines focusing on inflation, interest rates, and even recession, are you seeing investors step back from the market? The short answer from all of them was no, but the nuances they shared was really powerful. A broker focusing on Florida apartments, which are arguably one of the most sought-after commercial real estate segments out there, said that buyers being squeezed by the low cap rates and rising interest rates aren't stepping away from commercial real estate. Instead, they're looking at other property types that offer higher cap rates like retail. Investors are substituting an alternative, but they are sticking with commercial real estate. Another broker who focuses on office and industrial properties in California said his client missed an important window in his 1031 exchange and had to pay taxes. But rather than taking his chips off the table, he's bringing his reset basis back into commercial real estate. He's buying more deals now. And a third broker who was in that panel focuses on single tenant net lease retail, and he said that buyers focusing on his segment have lots of different options within the space, so they're not going to the sidelines either. The conversation went on from there, but I did pick up three really significant takeaways. First, commercial real estate investors aren't running scared. They're looking past the headlines and they're looking at the hard facts. Things like job creation in the first quarter totaled 1.7 million, the second strongest first quarter on record. The unemployment rate is down to 3.6%, just 10 basis points off the record low, and core retail sales are at their highest level on record. And here's a big one. There's $18 trillion in US savings accounts and another $5 trillion in money markets. That's nearly $6 trillion in cash above normal. Think about this. For the first time in 30 years, US households have more cash savings than debt. Household balance sheets are at their strongest level since 1992, and that's a good sign for the economy. My second takeaway from that event was that investors have a lot of options just within the commercial real estate space. If one property type or market doesn't hit their target, then there are a lot of alternatives. Just looking at cap rates across the spectrum, commercial real estate investors can buy a top-tier premium asset in a highly sought-after market and get a cap rate in the mid-2% range. At the other end of the yield spectrum, investors can target value-add opportunities in softer markets and property types to get a cap rate as high as 9%. And there's an enormous span of options in between. Commercial real estate investors aren't locked into one property type, one class, or one market. There's an enormous menu. My third takeaway from the event was that commercial real estate investors are thinking long-term. They're not jumping in and out like people often do in the stock market or cryptocurrency. When you look at the long-term returns, real estate really stands out. In addition, it delivers cash flow and inflation resistance. Commercial real estate is particularly well suited to the current economic climate and the bumpy road that may be ahead. And that's why in our most recent survey of real estate investors, 71% said commercial real estate offers favorable returns relative to other investment classes. Real estate investors aren't running scared, because they're looking past the short-term bumps in the road and they're keeping their eyes on the horizon.